Hey guys, how's it going? Welcome back. In today's video, we're going to take a look at the third part of topic 6. This involves major world events and social change. So as part of the video, we're going to be looking at how major world events impact upon financial service providers and consumers, as well as social changes and how they impact on both financial service providers and consumers. So what sort of major world events are we talking about? Well, certain world events affect the environment in which financial service providers operate. These are things like financial crises and recessions, war, weather patterns, climate change and natural disasters, company collapses and financial scandals, as well as EU expansion. Now, for each of these, you'll need to consider the impact upon the global economy, the financial providers, and consumers themselves. So let's have a little look at these 5 in a bit more depth. Well, in terms of financial crises and recession, the banking crisis brought economic recession in its wake because banks stopped lending. This slowdown in activity travelled quickly around the world. When people in one country are losing their jobs, demand for the goods and services that they buy from other countries falls. The recession of one country infects another. The price of commodities is another factor that affects all economies, and the most important of these is oil. It's one of the most commonly traded, since oil is used for energy, transport, and in manufacturing, and there have been large fluctuations in the price of oil in recent years. The second major world event is war. When a country itself is at war, there can be a range of immediate and long-term effects on the financial markets and consequently on financial providers and personal finances. Finding the money to pay for a war generally means that taxes must rise or that government must borrow more. In terms of weather patterns, climate change and natural disasters, there is a clear-cut connection between these phenomena and personal finances. The price of food products on commodity markets directly affects the size of people's supermarket bills. E.g., the international price of grain affects the price of bread. So the effect of bad weather on food production, and therefore also on food prices, can be directly linked to the amount that individuals and families need to allocate in their budgets to food. When we're talking about natural disasters, we might refer to floods or tornadoes or other tropical storms. Of course, following these events, some people may need to put a greater proportion of their income towards making things right again. It might also mean that insurance costs increase for certain people. If there is a greater amount of natural disasters, insurance costs are likely to increase. In terms of company collapses and financial scandals, when events like this happen, the value of the problem-hit company's shares will fall very sharply. This can mean that there's a sudden loss in wealth for investors who hold those shares, either directly or indirectly. This affects both private investors and big institutions, including pension funds. There might be stock market uncertainty as investors pull their money out of the markets in case other companies will be affected. There may be a fall in people's confidence because if they cannot trust banks, accountants and other businesses, they will not want to put their money into any shares, in case other companies are also lying about their profits and debts. And there also may be better controls on companies and what they do. There might be calls to prevent other such collapses and to restore confidence in the market. And the final of these 5 is EU expansion. At the beginning of the global economic downturn, the fact that the euro was strong caused problems for members of the euro area, because their goods and services became less competitive than those from countries outside of the euro area. In addition, people who live in new EU member countries will find it easier to move to other EU countries and get work there. This might lead to effects on the employment figures in various countries, with many side effects, including that financial providers in an established member country may be able to recruit employees who have recently moved there and who can speak different languages that help it to sell its products abroad. Providers may also find it worthwhile to develop products to suit these people who have recently come into their country, whatever work they may be doing. So let's look at some of the social changes that might affect financial services providers and amend the way they operate. There could be changing attitudes towards money and financial provision, increasing ethnic and cultural diversity, increasing complexity, as well as changing demographics and changing attitudes to debt. Let's look at these in a bit more depth in terms of their impact on financial providers and consumers. When we're looking at changing attitudes towards money and financial provision, providers have to adapt their product ranges, delivery methods, and business models to meet the needs of a new, more demanding customer base. Consumers want to know more about the products that they buy, and they want information on the various options. This is why price comparison websites are becoming so popular. In terms of the increasing ethnic and cultural diversity, most countries are becoming more ethnically and culturally diverse. Many providers themselves are multinational organisations. Even on a local basis, they employ people of different nationalities and from different cultures. This means that there is a tremendous cross-pollination of ideas about what the provider should be offering and how it should be doing business, all of which should improve the products and services available to you and I as consumers. In terms of increasing complexity, complexity is increasing in almost every area of life, not least of which is financial services. At one time, each financial product fulfilled one need. Now it is possible to buy products that fulfill many. Offset mortgages, for example, combine the benefits of a savings account or current account with the loan needed to finance house purchases. These new, more complex offerings may offer benefits to consumers, but some consumers may not fully understand them or how they should be used. When we're looking at changing demographics, the UK, along with many other countries, has an ageing population, which is creating opportunities for many product providers. Saga, for example, is a group that provides financial products and a range of other products to the over 50s. But at the same time, this ageing population is placing an ever-increasing burden on the working population, which has to pay the taxes that will finance the rising costs of pensions, medical services, and residential care. When it comes to changing attitudes to debt, there was a time where people who could not afford to buy what they wanted simply did not buy until they had saved enough to do so. That said, in recent decades, many people were much more relaxed about debt and used credit to finance the purchase of what they wanted when they wanted it. Following the financial crisis, however, the resulting credit crunch and economic recession, as well as the uncertainty caused by the COVID-19 pandemic, people drawing back somewhat in terms of borrowing. They are trying to pay off their debts and are not running up more. This will probably change again in the future at some point, but it's likely that a more cautious attitude to borrowing will prevail for some years. Make sure you click on the link to access the next video in the series, smash that like button and subscribe to the channel for future videos.